We're here today with Andrew Ward, Managing Director of SelfWealth. Andrew, thanks for your time.
Thank you, David.
Are you able to explain a little bit about SelfWealth?
SelfWealth was really born out of frustration. For myself, working in the financial service industry for 20, 30 odd years, I was really frustrated on how to personally invest myself and not pay all the fees associated with funds management, administration platforms and financial planners. The only real option was to jump over the chasm, over to the dark side to online broking, but very quickly realising that you did value some of those services that you were running away from. So SelfWealth was really born out of trying to bring, I suppose, diluted versions of the traditional value chain into online broking. And I'm first to stick my hand up and say I was the biggest perpetrator of the problem I was trying to solve, but I wanted to remove the percentage sign from financial services. So why you pay 10 times as much for $1 million versus 100 grand, if you get the same level of service, I think is just all wrong. So that was the genesis of SelfWealth. So SelfWealth is all about helping self-directed investors benchmark themselves, use the collective intelligence of a peer-to-peer network to help you better perform and then execute on a flat fee basis. And really, I suppose our mantra is, what's the point of outperforming the market by 5% when 95% of people are outperforming you? So we try to solve that problem.
And in terms of the business itself, how's it progressed over the last 6 to 12 months?
Big change for us, obviously. Being a 6-year-old business, we ended up floating and listing the business in November last year. A few reasons behind that. First of all, it's very tiresome trying to raise capital each year. None of the original shareholders sold down, so it was more about the credibility, the branding. It's almost like we outsourced the due diligence for our people signing up to the ASX and to ASIC, because all those queries about will you survive, will you not, sort of ceased when we floated. So floating the business was huge, and ever since then, all the metrics that our KPIs that we track are going in the right direction.
And what are those KPIs, and how are they tracking?
Our KPIs, there are pretty much 4 of them. So how many trades are we doing per month? How many people are signing up to our premium service, and how much we have in the cash account. So pretty much on every metric, we're going 30% month-on-month growth. So we're really happy with all of them.
And what should investors focus on from the business over the coming 6 to 12 months?
The next 6 to 12 months are very exciting for us. We have now approaching 40,000 portfolios in the system, so we can really get a really good gauge on what's going on in the sentiments and how things are working. So we're becoming a bit of a data play. We're very excited about launching the world's first peer-to-peer or crowdsourced exchange traded fund to the market within the next 2 or 3 months. The SMSF 200 will be launched and listed on the ASX under the ticker code of SELF within the next 2 or 3 months. So that is the best 200 stocks of the best 200 self-managed super funds in the solution with proven outperformance over a long period of time. So that's a great way to harness the community into a product that everyone else can access. International trading as well will be on the agenda by July, and as much as I would have thought that we would have disenfranchised the financial planning community, they've reached out to us and said, can we use you to trade on behalf of our clients? So we'll be launching an advisor portal as well.
Andrew, it's been a very busy 12 months, but clearly another busy 12 months ahead. Thanks for your time.
Thanks, Dave.